Hi, I'm Kerry Craig, Global Market Strategist here at JP Morgan Asset Management. And in this video, I'll be discussing the key macroeconomic themes using the fourth quarter 2021 Guide to the Markets for Australia. Fading economic momentum in the third quarter of this year created unease amongst investors. An increase in COVID-19 cases in some large economies knocked both consumer and corporate confidence. Meanwhile, COVID-impacted supply chains exerted their own drag on economic activity. Despite this, the medium-term view for many economies remains strong. COVID case numbers are starting to fall and vaccination rates accelerate, which should lead to an increased confidence and a resumption in household spending and corporate investment. Household balance sheets remain strong and savings rates elevated, implying a boost to economic activity as mobility restrictions continue to be eased. Meanwhile, corporate spending activity is another pillar of economic growth, and capital investment coming out of this latest recession has been much stronger than in prior cycles. Central banks have shown that they are prepared to look through the short-term weakness and step back from extremely accommodative monetary policy as inflation proves to be stickier than expected. This tapering of bond purchases is going to be an important event for global investors, but not the only force driving markets as earnings and valuations across assets come back into focus. The slowing of China's economy as well as regulatory changes creates additional risk for the global economy and sentiment towards risk assets. However, we expect both government spending and monetary policy to do more to support economic growth, especially as China pursues its goal of common prosperity. Fiscal policy will likely to be the main tool used, and China has ample room to increase spending via bond issuance, which has lagged this year's quota. While new risks to the economic and market outlook have arisen as we headed into the second half of 2021, the economic growth outlook remains strong, and the reopening of many economies will support above-trend-like rates of growth. This should support corporate earnings, equities and credit markets and lead to rising government bond yields. Thanks for watching.